Okay. We are recording this session so that we can make it available to others online, so that everything out here will be available again later if you'd like to listen to it again. We've prepared about 12 deck slides to go through to give you an overall view of information, and then we will go into the question and answer session. So it's designed for about 20 minutes of information where we're talking to you, and then the remainder of it is question and answer. We do have a good amount of pre-submitted questions, so we'll start with those. After that, we will take open questions. You are able to submit those to us by either using your chat to submit to everybody or directing it directly to myself or Greg. So everybody just takes a moment. You can see where your chat box is, either at the top or the bottom of your screen, and that's how we will be taking questions. Let's see. One other thing just to keep in mind for everybody is that information is changing literally by the minute. I checked on the IRS website this morning, and more additional information had been posted out there. Some clarifications had been made. Things that we talk about today are our interpretation based on the information that's available. Tomorrow it can be clarified and it could be completely different. So please keep that in mind as we go through our presentation. All right, so Greg, should we get started?
Let's go.
Okay, fabulous. All right. Well, I say that. Here we go. All right, so we're mainly talking over today the components to help with business funding. So there are probably about 2 million pieces of information right now that apply to COVID in your business, and we've taken this element and boiled it down into what you see right here for the focus on the conversation today. If you would like us to go into deeper parts of the areas that have been posted out there recently, just send us a chat and we'll make sure to include that in our next sessions. So basically, we're going to touch on the Payroll Protection Program, what that looks like, the 50% refundable credit that applies to up to $10,000 of wages per employee, the employer side payroll tax credit for emergency sick leave, a little bit about disaster loans and bridge loans, and then touching on tax changes for 2018 to 2020. So for the most part, this is a very consolidated version of the various aspects of funding that the new stimulus has made available to us. And we'll talk about how they interplay and how they can help you. So with that, we will go into the Payroll Protection Program. The loan amount is set at 2.5 times your average month of payroll. So how do they determine that? If you had a payroll last year and were up and running in operations, you'll need to submit 12 months of prior payroll from the date of your submission back to 1 year prior to. So the very first time they can start processing applications is this Friday, April 3rd. Clearly, we don't have payroll yet for April 3rd, so what we did was, for ourselves, did the last applicable payroll all the way back 12 months. If you are a seasonal employer, you will look for the same 12-week period beginning either February 15th or March 1st. You get to choose. So whichever opening window, you'll go 12 weeks back, and you'll use that to show what your wages are for your average wages. And for employers that had no 2019 payroll, you will use the amount of payroll for January and February 2020. This is 100% backed by the SBA, and there are no fees to employers. The banks will receive clearly fees, but those will come directly from the SBA and will not affect your loan. Now included also is sole proprietorships and independent contractors. So the first phase starting April 3rd will be for those employers that are 500 and under. The second phase, applications opening up April 10th, will be for independent contractors and sole proprietors.
Devin, let me jump in real quick. The Treasury Department posted on their website last night the process and the application. It's important to recognize most commercial banks don't have their process down yet. So while the Treasury Department is saying banks can start accepting loan applications on Friday, your bank may not take the loan application the Treasury Department published. So what's critical if you are considering this path is to make sure you talk with your banker, you're in communication with your banker, and your banker has you on their short list of people to contact when they're ready to start doing this.
Absolutely, 100%. And it could be a little bit different, your experience when you contact them. Also new that is different from last week is the requirement to find credit elsewhere. So if you were on any small business administration webinars last week, they emphasized that you had to exhaust available credit first before you could apply for assistance, and that has been waived. So that is something that is different in the minute by minute. As Greg mentioned, how do you even apply for this? You apply through this through an SBA approved lender. They are working on bringing additional banks on that aren't currently SBA lenders. So if all else fails and you don't know where to start, call your banker. Would you agree, Greg?
Absolutely. Call your banker. If you haven't called them yet, call them now.
Yes, I can tell you that we have 2 bankers, and one of them I've been trying to call for a week, and all I can get is their voicemail. So, keep trying, because it is a virtual line, and the money is anticipated to run out. So the timing on this is definitely important. The other thing is that the benefits are the same regardless of your commercial lender. So it doesn't matter if you use Wells Fargo or Frost or Chase. The rate is the same. The amount approved is the same. Nothing is different. It's just who is processing it. So my experience has been, and Greg, tell me if you see something different, is that most banks are only processing for their current clients. So they're having resourcing issues as far as the volume in addressing these applications, and aren't really accepting.
I've been pinging with current clients about what their experience with their banks, and I have tested a few colleagues who are bankers. And I have gotten advice from one small bank saying, give us a call if you need help, and they were not limiting it to current clients. That was a few days ago. My bank is limiting it to current clients. Another banker I called said, we're not an SBA approved lender, and we're not sure we want to be. So you need to reach out to your banker. Hopefully you have a bank that you have business with that is an SBA approved lender that can help you with this.
Absolutely. And the document that the Treasury posted last night is really very good for technical issues. I'm not going to switch screens yet because I don't want us to get off track and not be able to get it back up there, but I will throw that up at the end when we're doing the Q&A so that you can see it. But that is a document that was posted about 8 p.m. last night, and it is very good as far as going step by step through the requirements and the questions that a typical employer would have. So that also being said, I'm just going to pause a moment and say we did not require registration for this this webinar, which means we do not have your contact details. So we are happy to share this presentation, and we're happy to share our supplemental documents and links if you would drop us your email in the chat so that we can send that to you after. So sometime in the presentation, if you would please just drop that email in the chat, we would be happy to send this out to you. All right, so payroll tax credits to help fund payroll. This has really been making some people's heads spin. So Greg, I mean, I think the best way to say it is there are 2 sets of credits, right? There's the emergency sick leave credit, and then there's the other credits, which some are saying, I think the IRS has it down as retention credit. A lot of people just have it mentioned as payroll tax credits.
Right.
So
it's worth noting on the credits as well, none of these are straightforward. So yeah, if your head is spinning, you're with everybody.
So the important thing to know about the payroll tax credit to help fund your payroll, aka the retention credit, is that part of the eligibility is that you did not receive funds under the Payroll Protection Program. So for the Payroll Protection Program, that's basically what we just went through on this slide. That is 2.5 times the average month of payroll. in this, when I can pull up the other document when we get to the end, there is a certain amount that is forgivable. It is directly related to how many people that you pay during that 8-week period. And I'm going to pop that up so that you can see what that looks like. If you received those funds under the program, you could not use this payroll tax credit. If for some reason you were not eligible for the payroll tax program credit, it could be that your entity doesn't qualify. Maybe the owner is not a citizen or legal resident. Whatever the reason where you don't qualify for the payroll protection program, you may qualify for the payroll tax credits.
And let me clarify, and you can correct me if I'm wrong. You're talking about the tax credits provided under the CARES legislation that was passed Friday.
Yes.
There are different tax credits than passed under the Families First law 2 weeks ago.
Yep. And on this one, you had to have closed because of government orders, or lost more than 50% or more of gross receipts over the same quarter last year. So basically, they're looking at your snapshot in time from this year as it compares to your time last year. The benefit is a refundable tax credit against the employer portion of Social Security taxes equal to 50% of qualified wages that are paid from March 12th to December 31st. So the credit is up to $5,000 credit per employee. The other elements of this is that employer size does have an impact on what your ability to claim is. If you have employers less than 100 employees, you get this credit regardless if they worked or not. For employers with more than 100 employees, you only get the credit for the employees that did not work during the calendar year. Anything you want to add to that, Greg?
So if it's under 100 employees, you get it for every employee that has worked. If you are over 100 employees, I believe it is a credit for wages paid to employees who had been furloughed or had reduced hours and you brought back.
Mm-hmm. That is my understanding.
Okay.
This one is the one I feel is a little least clear on the IRS website and just guidance in general. So we'll be looking for more on and how exactly this is going to take shape.
Yeah, I would say on that, if we're talking about order of priority, these credits are next week's priority.
Mm-hmm.
The payroll protection program loan is this week's priority.
Right. So for the payroll protection loan, yeah, absolutely. There's a cap on funds as it stands right now, unless there's additional stimulus. So definitely spend your time on that. The payroll tax credits and how to claim, basically, it's going to be withheld from your 941. And this is really easy if you run your own payroll and you hold your own deposits. Where this becomes a lot less clear, which is basically for the majority of the people on this call, is if you have an outsourced payroll provider. So basically, these payroll credits allow you to, tap your deposits to pay for your payroll and your benefits, but it's unclear how that's going to work if you use like a Paychex or an ADP or Paycom, things like that. So we have been in touch with payroll providers, just checking in to see if there's clarity. And as of 4 o'clock yesterday, still not a lot of guidance on exactly how that's going to work. And they're looking to the government on how exactly that's going to work for their customers. Let's see, advanced credits can be claimed if you're unsure if what you have is going to cover your need, and that has a draft form has now been posted, Form 7200. It's on the IRS website today. So, Greg, you mentioned it's out there, but you can't even really submit it yet because it's draft, right?
Right. Two things. Let me go back to your last comment about payroll processors. When the first act was passed, we reached out to a few payroll processors on how they would not make tax deposits. And the answer we got from all of them was, we'll get back to you.
Yeah.
Systems are not designed not to make tax deposits, so I think this is throwing them for a loop. This Form 7200, I think, is attempting to address that. That was released by the IRS today in draft form with draft instructions. So this is not intended to, and I think it says on it, do not file this form. The IRS is allowing you to claim the credits and be paid in advance, which is going to require that you forecast and estimate the credits you will be due, submit the form, and get paid. This is again, we're in next week territory.
Right, right. So when you're thinking about your cash flow, I mean, it's important to hear and start to understand what's available to you as a benefit, because you need to plan your cash flow and your ability to survive for the next, 2 months. But the hows of behind these tax credits are unclear, and we think it's probably going to be another week or so before we hear. But we're promised we're sending out information as soon as we hear otherwise. So if you do drop your email in the comments, we'll make sure that you're on the distribution list. So then we get to the tax credit for emergency paid sick leave, which is different than the credit that we just mentioned. So the availability for this credit is available to anybody who paid the eligible emergency sick leave. So regardless if you had any funds from the Payroll Protection Program, or if you used the other credit for the retention, this one is available to you if you paid emergency sick leave. It covers 100% of the leave that you provide, and it can be applied to payroll taxes, including Social Security, Medicare, and federal tax income withholding. So on this is where we're saying for these, if you run your own payroll, you can tap into any of the deposits that you've been holding that you haven't yet paid. So what's sitting out there that you will send to the government at your designated date, you can tap into. But if you have a payroll processor, how to claim this is a little unclear. I can tell you as of 4 p.m. yesterday, ADP had started creating reports to help define these amounts, but they hadn't yet come forward on how you actually make the credits happen. So the only thing that's really on the IRS website is that it'll be quick and easy to obtain. So once we know what that looks like, we will certainly let you know. Let's see what we have else here. The one other note on here is that the health insurance cost can be included in the credits. And for the amount of leaves that you're paying, there is no payroll tax liability for the leaves that are paid. In addition, if we have people on the call that are self-employed, you will receive an equivalent credit. What that looks like and how to process that still is a little vague. Then we get into documentation. Okay, so we're handing out all this money based on these various leaves that are out there. And so that's the sick leave and the family required leave. But what do we need to prove that we actually paid for the purposes in the law? So you need to make sure that you're starting to gather documentation based on the leaves that you're paid, so that at the point that you have to show your goodwill nature that you paid the amounts in good faith, you have documentation that shows that. This is a whole lot of words on these page, and I will make it available as mentioned, but I wanted to basically point out that they really, really highly suggest that you have everything in writing. Yeah. So your employee's name, the dates where the leave is requested, a statement of the COVID-related reason, and a statement why the employee is unable to work. So if it's because of closure, it needs the name of the entity that claimed the closure. If it's because a healthcare professional said to self-quarantine or potential illness, it needs the name of the healthcare professional. If it's because the school is closed, it needs the name of the school. And a little caveat there at the end is that if you have somebody that's over the age of 14 that cannot be left alone, there needs to be a statement of the special circumstances existing around that person. So they are really trying to make this clear and simple. So if you take nothing away from this slide, is that get something in writing from the employee that pings all the areas that make them required eligible to receive those benefits. So email, you know, whatever it is, get it down so that you have that. Yes, Greg?
Yeah, let me jump in here. We suggested to clients, and this can be overwhelming, but we suggested to clients as soon as the Families First legislation was passed that if you are paying people not to come to work, just start a list. Make sure you keep a list when you're paying people not to come to work. It will be much easier to do this as you go along than to try to recreate this in 2 or 3 or 6 months. Mm-hmm. The other thing that's probably worth mentioning, I don't think I saw it on the slides, is really this paid time off tax credit becomes eligible for paid time off starting today, correct?
Yep, April 1st. Mm-hmm.
So if you were closed over the last 2 weeks during the period that between when this law was passed and today, and you paid people, the tax credits are actually not available for that period, which was not clear to me when the law first passed. It became clear over the last few days.
Yeah, I would agree with that. And I would even say as recently as yesterday, and we have this as a Q&A in our session, so we'll touch on it again at the end, but the pay credits are for April 1st through December 31st, so the end of the year. So the credits are for that time frame. But if they're insufficient to cover that, you know, the pay might come from times before, but the leave has to be taken within that window. Okay. So Greg, do you want to talk about these next 2 slides? And when you're done, before we go to the Q&A, I'm going to pull up the document that the Treasury posted so that we can just circle back around to the Payroll Protection Program.
Yeah, so tax changes. I feel like most of you, I'm sure, I feel like I've been drinking from the fire hose over the last few days. There are, the law that was passed on Friday, the CARES Act, includes an incredibly broad list of things to be aware of. The Payroll Protection Program is the one that's gotten the most time. So I wanted to mention these things and say that these may or may not be priority 1, but these things are going on. And I don't remember, Devin, what slide 11 is.
That is the keep in mind.
Keep in mind. Okay, so go back. Sorry, now I know where to go. So a few things that I want to make sure everybody's aware of. Tax deadlines, I would expect by now you've heard the filing dates for all taxes have moved from April 15th to July 15th, along with the due dates for all taxes. So that took a little bit of pressure off the filing activity that's usually going on this time of year. I have had conversations with clients about unemployment and what they should do with their employees. I think it's important to recognize that part of the CARES Act also increased unemployment benefits to employees. They added $600 per week to each recipient of unemployment insurance or pandemic unemployment assistance for up to 4 months. So if you find yourself laying off employees, they are more quickly eligible for unemployment and the benefits are higher, and they extended unemployment for 13 weeks. Mm-hmm. I have gotten a few questions about recovery checks, and I got a lot of detail here. I'm not going to run through all of the detail. Perhaps in the Q&A we'll get more specific, but these are being processed by the IRS based on your last filed personal return. If your last filed return was 2018, they're using that one. If you have filed 2019, they'll use that one. If you have not filed an 18 or a 19 return, or if your mother didn't because she doesn't owe taxes, they are adding something to their website that allows you to file that. Something else that was on my mind, and I saw it mentioned in the CARES Act, they have eliminated 10% early distribution penalties on 401ks. You will still be taxed as ordinary income on any amount you take out of an IRA or 401k through the end of this year, but they've eliminated the early distribution penalty. You are limited to a $100,000 withdrawal. Then I think we get more detailed, and I wanted to let's move on to Q&A.
Okay, So before we move on to Q&A, I'm going to stop sharing for a moment, and I'm going to pull up the Treasury document that is just really quite fabulous. One second while I share this. Okay, 1 second, folks. This is why I didn't do it right in the middle. So let me get to this one and share this document. Okay. Okay, share. Okay. So when you go to the treasury.gov, they have this fact sheet out there that is just really comprehensive, and I would be happy to send out the link as well as the document at the end of the call. A couple of things that I just wanted to go over before our Q&A is that the details behind this that I didn't go into on this slide is that the loan proceeds do have a forgivable portion as long as they are used to cover payroll cost, mortgage interest, rent, and utility cost over the 8-week period after the loan is made. So that loan is made. I've seen a lot of information clarifying details here. Some of the things I'm going to toss in here aren't in this particular document, but basically it's from the time of origination. So basically from the 8-week period from the time that they fund the loan, that's when the clock starts. So as long as you use it for payroll costs, mortgage interest, rent, and utility costs, those amounts could be forgivable. There is a note right here that says due to high subscription, it's anticipated that not more than 25% of the forgiven amount may be for non-payroll cost. So basically they're hinting here that 75% of your loan amount needs to be for payroll-based costs, but it's not coming directly out and saying that. So if we kind of recap it, you get 2.5 months of your average salary based on the period that you had to submit, which should mean that you're given more than your payroll amount. So it leaves a little extra. If you have amounts that are not forgiven, loan payments will be deferred for 6 months so that you don't need to make those payments during this time. As I mentioned, starting April 3rd, businesses with 500 employees or less can begin applications. Just because you can begin applications doesn't mean that your bank is going to have it figured out, but this is the directive that is out there right now. And then starting April 10th, independent contractors and self-employed individuals can begin to apply.
Let me throw out here, I don't know how many S-Corp owners with one employee are on here, but I would say if you're an S-Corp owner and you're the only employee, you're probably in that April 3rd category. And April 10th would be for Schedule C folks or folks who don't have a legal entity.
Okay, fabulous.
And I would operate under that approach until your banker says, no, we can't take that from you yet.
Okay. And then as Greg mentioned earlier, what do you need to apply? Well, you can see here there is an application. The application compiles everything the government requires for documentation, but your bank may require something different. So this is a place to start. As I mentioned, I haven't been able to actually reach a person at my bank for over a week. So what I did is I downloaded this application and I sent everything that it said that it was required, and I submitted it to their emails. So whether or not that is the right approach, I'm not sure. But all you can do is continue to reach out to your banker and try to make contact.
Yeah, let me throw in here, I've exchanged emails with my banker daily. And today I did what Devin did. I filled out the application and sent it to him, and I'm sure he laughed when he got it. He emailed me back and said, they are probably creating an application that you can process online. The forms that the Treasury Department has provided are PDF forms, and I am confident in the need to process this data quickly. Some banks will try to take a more automated approach to pushing it through their system.
Hopefully.
And when they're able to do it, call
That'd
them,
be fabulous.
make sure you're on their list. Can I jump in? If you go about halfway down this page, sorry, I'm going to talk about how to calculate this a little bit, which is not what this says. This says what you can use it for.
Mm-hmm.
You do calculate this based on determining your average your average payroll for the 12-month period. The way it reads to me, it's the 12-month period before funding. One of the check boxes on the form from the Treasury Department and the SBA says that I'll provide my tax documents to my bank so they can confirm the amount I'm eligible for. It's not quite clear to me what the right period is, but they have been fairly specific. It is average payroll that can include benefits.
Mm-hmm.
It does exclude, if you have folks who make more than $100,000, they're only allowing the monthly payroll for someone making $100,000 or less. So
would be capped. Yeah.
20,000, you're capped at 100,000. The monthly amount for that is 83.33.33. So it is average payroll over a 12-month period, but you have to make a few more adjustments. It also does not include the employer Social Security tax. There are other things that are available for the owner. The employer Social Security tax, that should not be included in this calculation. So it's not horribly complex, but it has a few buts and what ifs in it.
Okay. All right.
There it is. It's right below what I can use it for. Sorry.
Right here. Yeah. What counts as payroll cost?
Yes.
Mm-hmm. Yep. How large can my loan be? As previously mentioned, loans can be for up to 2 months of your average monthly salary or payroll cost, plus an additional 25% of that amount, and it's subject to a 10 million cap. If you're seasonal, you use the window that we previously mentioned, and if you didn't have a payroll in 2019, but you have a payroll now, you use the average of January to February. Something off of this that came through, and again, like I said, the information is flying at us from all different areas, but I received a summary document from Gray and Reed yesterday that actually also mentioned that if you have an existing SBA loan, or if you have an existing disaster loan, that those loans could be rolled into and refinanced under these better rates. So that is not mentioned in here. I can't attest if that's true or not, but I think it's worth asking your banker when you make contact with them if that's something that can be put together. One of the things that does go through here is that if you have applied for a emergency disaster loan already, and you also apply for a payroll program loan, you cannot use the funds for the same thing. If it was your intent to have payroll coverage from the emergency disaster loan before this program was made available, you'll be able to roll that loan over to this so that you can have a forgivable amount. Any payrolls paid under the emergency disaster loan are not forgivable if it's in that bucket. You have to make sure that it comes over into the protection payroll program. So that's a very, very big distinction. Make sure you're asking a lot of questions of your banker as you're signing forms, okay?
Yeah, I would say don't be afraid to say it's the forgivable one.
Mm-hmm. Yes, use those words because that's what's being done over and over again. The other bit is how much of your loan will be forgiven. You know what, and Greg, tell me if you agree, but what financial advisors are saying, you know, behave as if nothing's forgiven, just in case there's misunderstanding or something's changed. But for the most part, what they're saying is the amounts in that 8 weeks, whether it's rent or utilities or payroll costs, the amounts that you pay in that 8-week period after your origination will be refundable under this legislation.
And I think that's great advice. I've said to a few clients, that we're going to spend the next month or two trying to figure out how to implement all of this, and then the next 6 to 12 months trying to figure out how to unwind it.
Mm-hmm.
The legislature, the government came forward with these bills very quickly. This payroll protection loan is very streamlined. It does not require the information that is normally required for any commercial loan. I think as we go through and figure out what's forgivable, we may have some more rules or interpretations layered on this. I think it is reasonable to proceed as if nothing is forgivable, and recognize that they're at least giving us some hope it's forgivable right now.
Absolutely. And then as far as, we got a good amount of questions on kind of clawbacks to the program, and we'll go through those in the specifics Q&As as well. But basically how I'm interpreting it and what I'm reading so far is that the amount of your loan is originally set by your historic payroll. However, the amount that is forgivable is based on what you actually pay during that 8-week time frame. So when you read things that says your loan forgiveness will be reduced if you decrease salaries and wages by more than 25% for any employee that made less than 100 annualized, or if you have reduction of headcount, when you're reading those, you have to keep in mind that your amount was distributed based on what your payroll was kind of pre-disaster, right? And then now for this 8-week period, you have an opportunity to bring up people to replenish their pay to their full-time or to rehire them back. But it's only going to be calculated on the amount of people that you paid in that 8-week time frame. Okay, and we'll get to specifics on some of the Q&A when we go in there. As far as rehiring, you have until June 30th to restore your full-time employment and salary levels for changes that were made from February 15th to April 26th. So basically that's saying is if you had a direct impact, if you felt like you immediately needed to reduce or lay off and it's not something you would have done, you have until June to kind of undo those things for those salary components to be considered in your forgivable amounts. These are things that I think are probably going to change a little bit as this unravels. So stay tuned on how that unfolds.
I have to dial something back here.
Mm-hmm.
There's a forgivable component of this payroll protection plan. I have had clients ask me about multiple entities and how to piece these together to maximize the amount. I think that is where you're going to get in trouble.
Mm-hmm.
I think that if you are looking at this for what it's intended, which is to keep your employees on payroll and to ensure that this is not a total collapse, you're in safe territory and we can rely on the forgiveness as outlined. I think if you get really clever about what you're doing in these applications, that's when you are at risk.
I agree. Yep. The intention is to keep people unemployed and have them receiving a paycheck so that they can then feed money into the economy, and we could move forward out of this crisis. So as long as you're doing it in good spirits, you're probably in good shape, but make sure you're paying attention to the rules.
It does say an asterisk at the bottom of this page. If these are used for fraudulent purposes, the government will pursue criminal charges. So
yes, yep.
Stay in the center. Don't get too clever.
Right. So this next question right here, you have to request loan forgiveness. It just doesn't magically happen. So how do you do that? I think that procedures will become more clear with your provider, once we kind of get into this, but basically keep documentation of what you're using the money for and make sure that it's eligible mortgage, lease, utility, and employee payments. You do have to certify that the documents are true. You are going to have to show proof of what you used to pay for it. And basically it's saying right here that the lender has to make a decision on the forgivableness within 60 days of the request. So we are far out from anybody being able to do this. First, we have to get through the 8 weeks where you incur expense, and then,
First, we have to be able to apply for the loans.
Right, exactly. So there's a lot of things here that it's there. Just know it's not a magical poof and it goes away. There are going to be steps where you have to request those forgiveness. The interest rate, this is something, previously when it was passed, it said not to exceed 4%. This is saying the interest rate is 0.5%. When do you start paying interest? Everything's deferred for 6 months, and interest will continue to accrue over that period, but you don't need to start paying until at that point, and it's due in 2 years. So essentially, you'll have a balance. The balance is due in 2 years. When you make a forgiveness request, the amount will be decided and applied to your loan, and then you'll pay the balance. No collateral is required. That is something that's different than the typical SBA loan. You don't need to personally guarantee. However, right here where Greg was saying, if you use this fraudulently, the U.S. government will come after you. You will certify whenever you make your application that all the information that you know is true. One of the things that I can tell you that this document doesn't specifically get into that I've been reading guidance on is that they're going to be looking at your payroll and your employment decisions on a person-by-person basis. So if you have like a population of 10 employees and your overall payroll maintains at 90%, that doesn't mean you get everything forgiven. They're going to actually make sure that every individual meets the requirements of this 25% or fully employed. So be looking for some more clarity on that, because this particular government document doesn't go into that, but some guidance from legal firms has said that it's going to be an employee by employee perspective. So that is the highlights of this really fabulous document from the Treasury. I'm going to stop sharing, and we're going to start with our Q&A that was previously submitted. And Greg will start with a couple of questions of those while I'm looking at the chat to see if there's any we want to add to the end. So if you've been holding some questions, go ahead and submit. We're going to go through the questions that were previously submitted via email now. And then if we are able to add additional questions, we'll do so at the end of the presentation. All right, Greg.
Okay, so one of the questions we got was, can owners get a salary plus distribution credit in the or can they get forgiven amounts for the PPP loans that include both their salary and their distributions? And my answer to that is I haven't seen any guidance on this specifically, but I would advise against that. I think the intent is to reimburse for payroll. To forgive monies used for payroll. Distributions are not specifically listed in the documentation of how these funds can be used. Recognize also, my assumption is the person who asked this question probably has an S Corp, and S Corps do pay owners with payroll and distributions typically. They have limited payroll amounts to the monthly equivalent of $100,000 annual salary. 8333 is what can go through payroll for your high paid employees if that was their salary before. If it exceeded 100,000, what you'll be reimbursed for, what the debt that will be forgiven will be up to 8333. So the shorter answer is I don't think you're going to get any coverage or protection for distributions. It will be amounts that go through payroll.
Excellent.
We got a question. This is not so much a tax question. I've had a lot of conversations with my clients about how to preserve cash in this crisis. Some of this dates back 2 weeks when this started. We had a question of asking, what can a group of tenants do to ask landlords for rent deferral due to little or no revenue? And much like my advice to talk to your banker, I'd say call your landlord and talk to them now. Everybody knows what's going on. If you call them and ask them, I've had clients tell me that the answer they got from their landlord was, no, your rent's due on the 1st. I had one client who told me they called their landlord and the landlord said, I don't know what we're going to do. The bottom line is if you don't have money to pay your rent, you can't pay your rent. They're not going to evict everybody from the building. What's critical, I think, is that you talk to your landlord. Tell them what's going on, make sure that they recognize that you are not able to pay. I think if you ask for anything, you can ask for forgiveness or deferral. 2 months to pay and don't charge me any late fees, I think is a reasonable thing to request. I have seen some emails from attorneys suggesting that you go review your leases, and I'm not sure that's necessary, but I haven't been involved in these conversations too much. The answer on your landlords is talk to them, tell them you don't have money to pay, ask them to give you some leeway on penalties. and a little bit more time to figure out your liquidity. This is probably what was probably still on everybody's mind. What if I need funds before I can apply or receive money for payroll protection? This crisis, this problem for businesses right now is all about liquidity, and you have a few options. I have had conversations with clients who have laid off employees or furloughed employees and sent them to unemployment until they figure this out. I have clients who have the ability to cover this. Those are becoming fewer and further between. The SBA has made available a bridge loan, a $10,000 immediately fundable or fundable within 3 days. You can apply for it on the SBA's website, and they are supposed to, per the legislation, fund within 3 days. Go to sba.gov. It's in a banner at the top on the COVID-19 resources. It's not completely clear to me how that $10,000 loan or advance fits into the rest of these loans, but it is available in critical need, and it's fairly easy to apply for. I think what's most critical is making sure you understand your liquidity, how much cash you have, and making sure you preserve it.
And let me add one detail about the payroll protection program. In the different details and caveats, it does say that bankers will have the ability to fund same day once this program is up. That doesn't necessarily mean that your bank has the infrastructure to be able to do that, but it is designed that these are quick injections of cash once you go through the approval process. So they are two different sets of loans, but basically when you apply for them, you're certifying that you're not using the funds, the buckets of loans for the same expenses. Okay, you want to go to the next question?
The next question leads back to the last one, actually. Should we pay rent while we're waiting for the loan to be funded? If you have the ability and it doesn't challenge your ability to do anything else, what I have been advising people to do is consider who it is you're paying to. Every business is in the same boat right now. We have tried to make sure, and we've advised clients, and clients have started this conversation with me. If you are doing business with mom and pop shops and local businesses, they've got the same challenge. How are they going to pay their employees? You might want to put them at the top of your list. If you're doing business with a large organization, a nationwide organization, they probably have a little bit more flexibility. So I would encourage you to consider that as you're figuring out who you're paying. It's really about figuring out which one is the most critical. Something else that I typically recommend in good times and bad is if you don't have the money to pay all of an invoice, most people will be happy to take partial payment, and in this, I guarantee you people will be happy to take partial payment. You might consider making a partial payment. I think what's really critical is call them and talk to them, let them know what the problem is, which they already know. They may be in a position that they're willing to forego. You might consider partial payment, or they might demand it, and if you don't have money, you can't pay it.
Yeah, and in that situation, you should definitely contact your lawyer to figure out what your rights are. So unfortunately, we can't answer more on your rights on this call, but you probably have some options. Okay, so the next question, what if I laid off an employee that was a poor performer and I don't want them back? Will this reduce my amount that's forgivable? Well, in essence, the answer is yes, but it's not intended to be a penalty. So basically, as I mentioned before, the calculation is based off of a running average of payroll. So if you're not paying that person within the 8-week period, then the amounts aren't going to be forgiven because you didn't issue the amounts. It's not intended that you would get an overall negative impact to the amount that is forgiven. The spirit of it is that you're not getting money that's forgiven, that you're not actually paying to anybody. So we'll probably see clarity on this when it comes down to the question of, should you be hiring people back? The intent of the bill is, bring in the people that you would need to keep on to stay operational. So if 8 weeks from now we come out of this crisis and you're ready to start, going full into operations again, do you have all the people that you need? If you don't, what's your plan to have those people? So if you don't have work for them, is there work that you can find? We'll get into this question a little bit more, but you're not forced or intended to keep everybody employed. You need to look at who does it make sense to furlough, who does it make sense to lay off, and who does it make sense to keep on and continue to give a salary and be able to have some value out of them having them on your payroll. So it leads into the next question. What if I don't have any work for people to do because we are closed? I need to kind of point out the obvious is that have you sat and looked to see if there is a way that you can operate in a different way? We've seen even things like gyms and doctors, as far as elective items, be able to give services virtually and over the internet and hold classes and do things where they're operating in a different way. So can you do delivery? Are there things you can do from there? Beyond that, there are things where you might be able to accept this loan and hope that things are forgivable and be able to provide your employees to help in another area that isn't direct to your business. But beyond that, when you're thinking about your business, think about the next 9 months of your business. Is there any training that your people can do that they could go ahead and get out of the way now that is online, or that they can do with the provider maybe face-to-face like this instead of going into a classroom? Is there any training that you would want any of your staff to do to help your business operate in a different way? I can tell you, if you have a business where you're event heavy, or if you provide services to an event, I would be putting a lot of emphasis on thinking about how you're going to run your business for the next 9 months, not really knowing how many events we're going to have, right? And so you can be paying employees to come up with a strategic plan. You can come up with ways that they can be structuring content, building programs, a lot of things that are behind the scenes projects that you've been waiting until you had extra time, anything like that that can help you get back on your feet faster, they could be doing now during this 8-week period. This is very business specific. This is one of those things that if you're really not sure and you need some help thinking through it, you should contact your trusted advisors. You should get some help thinking about what could you do with your employees if you don't actually have something tangible for them to work on right now during this 8-week period. Next question, when are the due dates on the loan applications? As marked in the Treasury document we went through, the deadline is June 30th, but basically all the advice saying is the funds are not going to last that long. That's at least based on what has been passed to date. It is entirely possible that more funds are passed and more funds are made available that falls into this infrastructure. But from what we know today is if you're interested in using this program, you need to get your documentation in as soon as possible. Very unlikely that there's going to be funds left at the deadline of June 30th.
If I can throw something in here, I have a client who's getting advice from an industry organization to leave her employees on unemployment until she can open her business again, at which point she should apply for and use the PPP funds. I was intrigued by that sort of staggered approach. I threw that by my banker today, and he said, oh, she needs to apply quickly. When you read the guidance on the Payroll Protection Program, your 8-week period starts on funding. Mm-hmm. It's not clear to me, and I posed this to my banker who said, yeah, it's not clear to me either, if typically the date you fund is not the date you're approved. So I would say get your approval as soon as you can. You may have some flexibility in when you fund, but there are limited funds. So get your approval as quickly as you can, and then figure out if you have an ability to manage when you fund.
Right. In worst case scenario, if you freaked out and you applied and then it didn't turn out the way that you thought it was, you could just pay it all back. You release the funds and pay it all back. But if you think that you might benefit from this program, you should definitely get your application in. So that takes us into our pre-submitted questions that go into emergency sick pay. So the first question is, can I pay for the 80 hours of vacation hours before April 1st? So we actually are receiving conflicting information in this area. According to what's on the DOL website that's been posted fairly recently, it clearly says that the leave falls between April 1st and December 31st, and it's not retroactive before this time. However, we've gotten guidance from law firms and HR compliance firms that has said that the leaves can go back as of the date that it was signed, so as of March 18th. So based on what's written in black and white on the DOL, the answer is it cannot be retroactive, but as I mentioned, other entities are putting out conflicting information, so I'm thinking that this is something that's going to get clarified over the next week. So if you paid an emergency leave prior to April 1st, keep your documentation. It will shake out, but we'll get back to you on what to do with that. What do I need to document for leaves? We touched on that in the presentation. Some presentations say that there is a form that will be used and to expect that to be posted, but then other things say, a simple written explanation, which is what the IRS had posted on their website as of now. Get the written explanation from your employee and make sure that you can be able to show that that information came from your employee. What pay periods can I claim the payroll tax credit? As it's written now, April 1st to the end of the year. However, I mentioned that there is the form 7200 that's advance on credit. So basically, that's showing that if you don't have enough money, you can get an advance, but I don't know if it's going to go backwards. I think that'll be clarified. It seems reasonable that anything within 2020 could be used to help fund, but that's not what is being said at the current moment. Let's see. We had also a later email came in about how do I file for the exemption not to provide the emergency sick leave for under 50. So it does say that small employers can file for exemption, but it has not yet been made clear how that is going to happen. So that's one of the things when you go out on the website, you will see references to dates. There are several things that were supposed to be posted by last Friday that still aren't posted. So we'll continue to watch and read and consolidate and understand, and when this information is made available, we will let you know. Now, given the fact that based on what's out there, the leaves are supposed to start today, I would hope that they clarify that very, very soon.
Right. I went out to the Department of Labor website this morning after Devin and I spoke earlier just to confirm. It does still say the approach is forthcoming, and the approach also specifically said, do not fax your documents to the Department of Labor. So they recognize they're on the hook to come up with the exemption process. They don't have it yet.
Yes, they don't have it yet. And let me see, I'm looking in the comments now. It is 3:02. If there's anybody that needs to drop off, thank you very much for joining us today. If you joined late, I mentioned we do not have email registration. This is an open call. If you would like our resource documents and our links that we will be sharing, make sure that you put your email in the chat session so that we can email that to you. If there's any specific topics that you would like us to dive further into, we will be having more sessions like this. You could put your requested topics in the chat as well, and we will have additional sessions to help clarify. So as I'm looking through our chat right here, there are 2 more additional questions, and one is talking about paying leave prior to the 1st. And yeah, I just went over that. That is a point where we're getting conflicting information. So right now it's saying the 1st forward, but we will get back with you with more information once that's received to be more clear. The other question is the 8-week time period reference. Does that clock start on the day when we have loan funds available? As it's written, it's saying date of origination. So that would be when you're approved and loans are funded. I'm assuming there's going to be a little bit of window in there, but as it's written right now, it's once you have the funds, the 8 weeks. That's when
funding. It says date of funding.
Yep, that's when the time clock will start. So basically, when you're reading the things that are kind of confusing about things that were in existence on February 15th, they are basically saying you can't pay for things you didn't have prior to the emergency. So if you didn't have rent and now all of a sudden you have rent, that's not going to work. It's things like that. So can you pay more to somebody? Yes. I mean, we have several people that have asked, they say, I have low income workers and right now they can get their full amount of pay if they don't come to work and they sit on unemployment. So how can I get them to come to work? Well, if they are legitimately scared for their health, you don't want to pressure them. But what you might have to do is you might have to pay them more. Their unemployment is going to be based on what they were paid prior to the crisis. So if you pay somebody $14 an hour, you may want to consider them paying $18 to $20 an hour now. So those funds that will fall into that 8-week period that's paid and will qualify, or at least look like they qualify to be forgivable. But that's how you kind of go through these. How do I get people incented to work when they cannot work and get fully paid on unemployment? So if you need more advice on your particular situation, that's where you reach out to your trusted advisors. We have a kind of HR self-service with a call center that's very inexpensive at $87.50 a month if you want access to that. We have service plans that we're providing. If you have an HR professional, these are the conversations that you need to be having with them because it's designed all so that you survive. So you can't survive if you don't have employees that aren't willing to work if your business is employee heavy. So you definitely need to get creative in the sense. I'm just looking to see if there's any additional questions. Greg, did you have any additional come in?
I don't have any questions, but on your last comment, I just want to throw out, I had a client ask me yesterday, they said, if I lay somebody off and they go file for unemployment, that's going to impact my unemployment tax rate, isn't it? And the answer to that question was then and still is, your unemployment tax rate is going up anyway. Tremendous demands being made on that system. It is something that is available to you to help your employees in this time. And your tax rate for unemployment, I think, should be at the bottom of the list of things that you are concerned about right now if unemployment is a better answer for your business and your employees.
Yes, yeah. And there are several states that have waived the COVID experience rating. I think they're planning on relying on government funding to kind of wash that away. We don't have updates yet on what Texas looks like. So can't really speak to that, but I think that's something that's going to be coming forward. We can talk more about the specific employee side of things in future sessions if that's of interest. I think as far as questions, it looks like we're out of questions at this point. But if there are additional topics or additional questions that you would like discussed, if you'd go ahead and drop them in the chat now. Don't forget to include your email if you haven't yet done that so that we can provide you with the presentation as well as the resources that we've cultivated. And really, from all the business owners I've talked to over the course of the last couple of weeks, you put your time in the payroll protection program, get in line for that, but everything else, you're going to have to take a breath. It's stressful, it's confusing, people don't know up and down, and it kind of is what it is right now. And we'll do our best to make everybody clear and educate as soon as information's available. But there are resources, they're out there, and it's just navigating them and getting them to you so that you can utilize those. Greg, anything else you'd like to add before we close out?
That's it. Don't hesitate to reach out if there's anything either of us can do for you.
Excellent. Well, with that, we'll sign off. I'll give everybody just one more minute to get their email in before we close, and we will also post the recording of this. But for now, I will go ahead and pause that so there's not the awkward silence at the end of the recording.